A 1031 exchange allows you to defer taxes until you sell that property for cash later. But if you don't sell and continue to swap up the property for a larger property every single time, you can literally kick the can down the road and not pay taxes on it at all. So it is one of the golden goose techniques for investing in real estate. It's really important that you know what you're doing with a 1031 exchange, because if you mess it up, you will not be able to take advantage of the tax benefits. And I've seen a lot of people lose out on those tax benefits because they don't have a proper accounting team or they just didn't do their 1031 correctly. My name's Meg. I'm a real estate developer in Nashville, and I've built over 200 condo units that are eligible for 1031 cash flowing investment. I've also done about over 10 million in my own personal 1031 exchanges. So I've worked with a lot of investors over the years that have done things like selling land that wasn't going to perform well for development and buy units that are cash flowing in, one of our buildings as an example, and they use the 1031 exchange mechanism to make sure they didn't pay taxes on what their land had appreciated for. Other investors have bought product of mine, like industrial buildings that had similar buildings before, where they had to place the money by the end of the year because you only have 180 days to identify the property. I've seen a lot of different structures in 1031, but either way, if it's done correctly and you have a good accounting team, you can save a lot of money in taxes, especially if your plan is to keep, owning cash flowing real estate. First piece of advice would be to get a very good 1031 accountant and exchange company. There's several that specialize in each market. And if you mess this up, you can very much jeopardize the 1031 exchange. So, go off with personal referrals and do a lot of research and make sure that you know someone that is associated with the team that you're working with, because I've seen a lot of people's 1031s get messed up by not using a professional team. And of course, this is not me giving tax or legal advice. This is really just for educational or entertainment purposes. But yes, you should refer to the proper professional team that handles 1031 exchanges. 2, you have to really pay attention to the amount of time you have in between selling the last property that you sold and identifying a new property. It's typically between around 180 days. And if you don't pay attention to these deadlines or make it in time, then you'll likely not be eligible for the 1031 program. I've seen people make mistakes in how they're going to buy something, or maybe buy the wrong thing because they're so stressed about it, but you kind of have to plan ahead and make sure that you have something to go into before selling your previous property. On that note, my third piece of advice would be to identify multiple properties that you would feel comfortable buying in the case that you sell one, because for many reasons I've seen people having transactions not go through. This happened more recently on one of my projects. A seller was under an LOI that wasn't an exclusive, meaning a letter of intent, so like a contract to buy a piece of land. They were under a non-exclusive LOI to purchase a large building. I'm talking, to call it $20 million. And they had to buy this by the end of the year for a 1031 exchange. We're, a month before the end of the year, and the seller wasn't an exclusive LOI, but we all thought we had a handshake, changed their mind, and that person's 1031 exchange, they only had a month to find a different one. I don't know if they even did, but you need multiple identified properties that'll work, because inevitably people change their mind, or things happen, or family issues come up, and people, can default on contracts even, but you have to have several options to go into, because if you end up getting towards the end of the year, getting towards your deadline, and you're just banking on one, it's really bad not to have a backup unless you're being willing to pay the taxes on your original property. 4, I would look for more creative asset types than what people typically do. Most people typically go into like a very conservative like retail lease or a bank building or something like that, because it's a safe cash flowing investment. But the returns are so low in something like that it almost doesn't offset the gains you would pay if you just did something more profitable and paid the tax. So I try to look for more creative asset classes that cash flow. I've mentioned before, I build buildings that are condos that are put into short-term rental pool that cash flows. That's something that I've found, but there are a million different ways to create cash flow in real estate, and things that are a lot more accretive, or in areas that are appreciating, or in places that will allow for you to make higher returns than just a typical like retail lease, which is what usually gets recommended and pushed by IRAs. When you make your profit on your real estate sale, you have to roll it into a property that's even larger than the last property. And so you're continuing to grow your net worth with the 1031 exchange. It doesn't work to make a profit and sell something and then go into a lower property. But your qualified intermediary can go through that with you. But generally, you have to be prepared to buy something that's a larger property or estate. One other thing I found that was super interesting, maybe less advice about 1031 exchange, is that if you continue to defer your capital gains until you die, sorry to be morbid, your heir will accept the value of that asset at a higher set basis, but all those deferred capital gains are completely gone. So that's extremely powerful, and that's why it's one of the longest running, most powerful tax shelters is real estate and using 1031 exchange in the US. I know this is a very specific topic, but I hope you found this helpful if you're considering a 1031 exchange. If you want to find out more about how I invest, please watch this next video.